Hi, everyone. My name is Lindsey, and I've been given the opportunity to work with the Petawa Military Family Service Resource Center for the second time to present a little bit of a home buyer's presentation to people that are posted or looking to purchase and are in the military. It doesn't just apply to the military, obviously, but certainly an opportunity through that resource that I'm happy to be able to provide, and I'm looking forward to it. We're doing it this year in a Zoom format. Because of the pandemic, we don't obviously have the opportunity to meet in person, but the benefit of that is actually that it's a video presentation. And so it's something that can be recycled and used over and over and watched over and over for the information that it contains. And so hopefully, putting myself on the spot here a little bit, hopefully it's information that is valuable and a useful tool for you. So I do have a presentation with some slides, and I'll just screen share that for a second and jump into that. So just bear with me 1 minute here. Okay, so you should be seeing a screen now that says a little bit about me on the left-hand side. So I do like to add a little bit of information about myself as a person when I speak to buyers, just to give them a little bit of a comfort level as who I am as a person. I am self-employed, and so, you know, it's a little bit one of those things that I get the opportunity to add is to tell you kind of who I am. So I do have just a little bit of information there for you. I am a mom. I have 4 kids, one of whom has just joined the military, and we're quite proud of that. And the other ones that are coming along nicely, and hopefully, you know, will be able to work into successful careers of their own. Been a military spouse for quite a few years, since 1998, both with the Army and then with the Air Force. So I've done the tours, done the taskings, done the air postings. I've done the big posting across the country once, that type of thing. So I do have an understanding and a knowledge. It was a few years ago, obviously, but I do have an understanding of kind of the stresses that are involved in some of the things that are just going to trip you up, or things that are just going to be aggravating. And I do try and kind of help clients and customers navigate those waters kind of a little bit better, or just, you know, questions that you have. I know that it's going to be a stressful situation, and I try and work with it as best I can. So as I said, I was posted only once right across the whole country. I did grow up on the West Coast. So, you know, have done that big move, have changed my life basically completely. You know, you step away from family and friends and a job and things like that. And so I do understand what that looks like. So just threw in a few pictures here of the family, the kids when they were younger in Shediac on the Big Lobster, and then some more recent family photos of us. So jumping into the presentation, you are looking to purchase a home. And you want to make sure that you're setting yourself up properly so that when you go to do that, you can find a house, you can fall in love with the house, and you can buy on it, and you can, you know, make sure that you're successful. In today's market, that's absolutely a crazy thing to go through. And so, you know, you want to make sure you're set up as well as possible. And that's what we're here for. So my favorite time to jump into a file with customers is actually right at the very beginning, where I have the opportunity to look at your numbers, look at your budget, look at your credit, look at all the pieces that form a file, and say, you know what, guys, you're in great shape, or we need to make a few tweaks. Let's get on that. So when we're doing that, where we start is actually with the file itself. So we need 3 components of any successful file. Those obviously are going to be money related when you're purchasing a home. So we need some income. So we need to know that there's a stable income that's going to support this mortgage long term. We obviously cannot predict everything, but you know, unless something weird happens, there's an income in place and it's reliable. We need a down payment. So we need to look at, do we have a down payment? How much is it? What's that down payment going to dictate for budget? Where did that down payment come from? That type of stuff. And we'll touch on that as well. And then we need to look at credit. Now, credit is something that I actually harp on a little bit more. And the reason I do that is because the other two, your income is what it is. Your down payment, you can always save more, but your credit is one of those things that if you don't have any, you need to get it. And if you do have it and it's a little bit messed up, it's challenging to fix it. So it's kind of the hardest piece of the 3 main parts. And so it's something that I'm going to touch on and provide some information on, and something that a lot of Canadians really don't look at. So something that we're going to touch on. So first piece, jumping in, is your income. So if you guys are looking at this presentation, chances are you're D&D, so you have a salaried full-time income, and that's fabulous. That's the best kind of income that you can have. It's completely reliable, and lenders know that your risk factor is going to be lower than some because your income is stable and not generated from your own person. So it's something that they know is good to go. So we're going to look at that income. We're going to look at your spouse's income if that's applicable. We're going to see what the components of that are, and we're going to have to prove that. So I'm going to ask you for some documents and we'll go through what those are. There's a little bit of an idea there of what they usually are. Okay, so salary for the D&D folks, and then hourly or part-time, full-time, self-employed, that's everything usually for the spouses. So we're going to look at those things. We're going to see what those incomes look like and how much of those incomes, how much of those dollars are going to be usable. Second thing we look at when we're looking still at income is that spousal employment. So if you're already in place and you're renting and you're just looking to purchase in the local area, then your employment as a spouse is going to be easier to use because it's already established and it's likely already in place. And so we can just look at that. Unless it's part-time, that becomes challenging still. But, if you're already working and you're not moving very far, you're just going from renting to buying, then spousal employment is something that's definitely going to be more of a factor. If you're posted, however, your income may or may not be usable. And the main reason for that is going to be, is it coming with you, or are you starting fresh, maybe in the same field but with a new employer, or are you changing jobs completely, that type of thing. So conversations we'll have on that to figure out whether we're working with a 2-income household or a 1-income household, because that makes an enormous impact in some cases on the budget size. So conversations we'll have surrounding that. The next component being down payment. So down payment, it's pretty simple, pretty straightforward. It's the money that you have. In Canada, mandatory down payment is a minimum of 5%. You cannot borrow 100% of your mortgage loan from the bank. You need to have 5% for the purchase price. So pretty simple concept there. You either have the money or you don't have the money. You can be saving the money. It doesn't all have to be in your pocket right now, but it has to be there by the time you get to the purchase place. So if you're buying now and you've got 3 months till closing and you're still $5,000 short, that in that space you need to make up that $5,000, and that's a decision that you can make. Can I do that? Can I not do that? Is that reasonable? Is that not reasonable? That type of thing. Okay, we can put our money in many places, as we know. We have to show where it's been for the past 90 days. And the reason for that is quite simple. It's money laundering and other kinds of fraud and stuff like that. So lenders are going to do those checks and balances to make sure that that money is legitimate. It's not from crime. It's not anything funny like that. And we do review those to make sure. Gifted down payments are the other source of down payments that are allowed, and that can be from immediate family. And what that simply means is that you're buying your first home. Mom is going to give you $15,000 for doing that. And we're going to show that transaction coming across from mom's account to your account with an accompanying letter that is lender specific. So I actually provide that. So pretty simple concept there on down payment. It's pretty straightforward. What is not allowed, or very, very tricky to use, and so pretty much not allowed, is a borrowed down payment. They do exist, but they're not something that I work with very often, and not something that most lenders want to work with. And the chief reason for that is that if you're buying a home, a lender and you as a buyer wants to see that you've made an effort to save some money, or if you're gifting it, there's a reason for that, right? But it's real money. It's not debt. We're not adding weight to your file on the negative side because you don't have the money. You're not prepared. So that's kind of where that comes from. It's a little bit of a parenting thing, but it is definitely, a piece that lenders are looking for. It adds strength to your file. Have you saved money? Right? Or have you not? It's gifted, and why? That type of thing. If it's borrowed, it's definitely going to be something that's going to pretty much be a hard stop for most lenders. So credit being the third piece, and I did warn you I was going to harp on this a little bit. So credit is one of those things that's kind of a plus and a negative at the same time, right? We need it. We have to have it to be able to live our lives and buy our homes. But, having it is a double-edged sword. You can have too much of it, you can spend too much of it, you can get yourself into trouble. It's a management skill. And that's exactly why it becomes part of a mortgage application. It's a management skill. Banks, lenders, they want to see how you manage. And really all they have, other than your savings, is your credit. So that's your history of how you manage your finances. I've got a credit card for $5,000. I've got a $1,000 limit on it. I've never missed a payment. I'm in good shape. Or I've got a $10,000 credit card. I owe $9,998, and I missed 3 payments. You can see how one is a good file and one is a file that's got some mold on it, and it's maybe not as easy to work with. So that's what we're looking for. We're looking for the score, and we're looking for the details, so the data. right? So do you have credit? How much credit do you have? Is your credit well maintained? That type of stuff. If you're a person that doesn't have credit yet or doesn't have very much credit and you're looking to maybe add to that file, add to that weight, what you want to do is actually find a bank credit card. Those are the golden goose of credit. If you can get one, perfect. Because lenders, banks don't give those out to everybody. And so if you've got one, that's kind of, lets other lenders know that, what, this person's is all right, they're in good shape. So a lot of Canadians, as I said, they don't actually look at their credit. They have no idea what it says. And some Canadians are fabulous. They know exactly what it says and it's in great shape, or it's not in great shape and they know it and they know why. So something that we're going to review as part of the package that we're going to do with pre-qualification, and definitely something that is a key component of your mortgage. So ways to check this on your own. Most online banking has a credit check piece to it. If you're doing that, you're using TransUnion. When I pull, I use Equifax. They're two different data sources, but they gather the same information and then they weight and build the files just slightly differently. But the key components are there. The data is there to tell you what your credit looks like, and the score is there as a gauge to tell you if you're in good shape or if you've got some work to do. So scores start at 300. I've never seen a 300 and I don't want to. And they go up to 900. And I've seen that magical 900 unicorn once on one of my own files. And I have a few colleagues that have seen it as well. Kind of the winning file right now in my company is we have an agent, actually fairly local to me, that has seen it. She had a double 900. So husband and wife both had 900s on their credit. So that was kind of a holy crap. We've never seen that before. That's fabulous. So that's kind of your goal. If you're sitting anywhere in the 7s or 8s, you're definitely in good shape. And that's not just, you've got tons and tons and tons of credit. It doesn't have to be that. It's just that what you do have is well maintained and it's healthy. So minimum is going to be at least a year or two, and at least 1 or 2 credit products, one of which should be a credit card, because that's a management piece that you are affecting every single time you're spending and then you're paying. Fixed payments like car loans, they're absolutely good, but they're more of a set it and forget it payment. So they're not going to be as indicative of how you actively spend and pay bills. They're more indicative of you've got a job and there's money in your bank account when there needs to be. So something we'll have a conversation about for sure, and something we'll take a very good look at. So questions that you should be asking, whether you go with a mortgage agent such as myself or whether you go with a bank, questions that as a military person you should be asking just to make sure that you're protecting yourself. So you want to know that your mortgage, on your first house is going to be a mortgage that you can take with you without incurring any penalties. And there's a couple of different ways to do that, and they're listed here. You also want to make sure that if you have a mortgage and you're looking to buy now, and then you're looking to buy with your next posting, potentially, you're setting yourself up in a position where you can do that easily. So you want a mortgage that's either or both portable. And portability is one of those things that's a key component of mortgages. Not every mortgage is portable. As members of the military, we do have some coverages for penalties and stuff like that, but getting into that can be a little bit dicey and a little bit tricky, and the rules around that and the policies around that do change fairly regularly. And so, making sure that you're portable and you don't need to worry about those penalties is something that you want to do. And Quebec is one of those wild cards that you need to think about. Being posted to Quebec doesn't happen to everybody, but you want to make sure that your lender can service your mortgage in Quebec if that becomes a requirement. Or you want to make sure, and these usually go together, that you have a D&D relocation clause. Most of the big banks in Canada do have these. And what this simply is it's a clause that says we appreciate your business and your service, and we're going to break your mortgage because you're posted, and we know it's not your choice to be posted. So we're going to break your mortgage and we're not going to charge you a penalty. There's a discharge fee, but it's a very small fee. It's less than $500 usually. But the penalty is broken and waived and not there for members of the military with a posting message. So a simple thing that you can prove. And these two tools work together a lot. What I will frequently do on military files is I will use the D&D relocation clause to break the mortgage rather than porting it, because rates are more favorable now than they were at the time, or they might not be. But it's a tool that I can use to definitely build the best options and the best files for clients, not just for this purchase, but for future purchases as well. So things you want to look at things that are components of your mortgage that need to be there, that should be there, just so that you don't have to worry about policies and penalties and things like that. You might need to, that might be a situation where you really want to do that, or you might just really like the rate on a lender that doesn't have some of these things in place. Those are conversations that we can certainly have, and the risks surrounding those. But for first-time home buyers, if you want to set yourself up so that things are as simple and as easy as possible, these are kind of the key components that you want. So a little bit of a marketing tool on the next slide here. Why is a mortgage agent something that you should be considering? Obviously, you can go into your bank and you can get a mortgage from them, and that's no problem if you like that. However, there are such things as mortgage agents and mortgage brokers, and it's a tool that not everybody knows about, and it's a tool that actually has a little bit of a bad reputation, because originally the industry was started for the folks that went to the bank and the bank said no. So it's evolved from there. Most of the clients that I work with don't fall in that category. They can absolutely go to the bank, but they choose to go to an agent instead. And the reasons that they do that, obviously they're personal to them, and there's lots of them, but the main ones are that they want to deal with the same person from over and over. So they want to be able to do a mortgage with me or with any agent, and they want to be able to ask them questions at any point in time during the term of that mortgage. They also want to work with that person again. If they purchase a new house, or if they're refinancing that property, or they're switching lenders on that property, anything and everything along those lines, they're building a relationship with one person, and there's a trust and a familiarity there that they like. The other few options, obviously I've listed some of them there, but kind of the main ones to touch on is that I'm a mortgage expert. I actually hold a mortgage license, a financial license. So I'm fraud checked and criminal record checked and all that stuff on a regular basis. It's done annually that my license is renewed. And I have an education component behind that. So it's all I do. So it might be that you've got a little bit more challenging situation, or you just want to ask a whole bunch of questions, and I have the time and the space to do that. I will provide that to you so that you know that you've got all of the tools to make a very informed decision. Okay. The other one right now of the list that I've got here for you guys is that I am fully virtual. As you can probably see, if you look behind me, I'm working from a home office, and I do that always. It's something I didn't do prior to the pandemic, something I've transitioned into, and something I will continue to do as a military spouse. It's definitely a key piece that I can be flexible and move with my husband, and also that I can do that from home, so I'm not having to find and maintain office space. So definitely a tool that is handy, and it also speaks to building that long-term relationship. If you get posted out east or out west or out to the prairies, and I stay in Ontario, or I get posted as well, we can still work together. We can do everything that we need to do using virtual tools, email, Zoom, e-signatures, all that kind of stuff. So just a few reasons why trying a mortgage agent on for size might be something that you want to think about. Happy to have a conversation with you about the services that I offer and how I work. So the next piece here is a little bit of a budgeting tool. So when you're buying your first house, you're a renter, and so you can, or maybe you're not a renter, maybe you live with your parents, but in most cases you are renting, and so your monthly numbers, what your utilities cost, your groceries cost, your car payments, your insurance, all that stuff. You know how much you pay the landlord. What you maybe don't know, or maybe haven't thought about, is I'm buying a house and it's a really big number, and what is that big number in a monthly obligation? And so this budgeting tool does that. So these two properties, the one on the left is definitely sold. The one on the right might be, I'm actually not sure. I did look it up and I couldn't find it, but that doesn't always mean anything. It's a new build, so a little bit of a different animal there. But what this sheet does is it'll take your house numbers for the purchase, and it'll break it down. And it'll break it down 4 ways depending on your down payment size. So a little bit of a handy tool there. If we just look at the left-hand sheet on the left-hand side, we've got a 5% down payment. We've got a rate plugged in there, which is not a current rate, but it'll be current if I build the sheet for you, keeping in mind that they change almost weekly. It'll give you your down payment size, your mortgage amount, which will be your down payment or your purchase price less your down payment, and then it'll add your default insurance, which on this slide, because these are sponsored, is through Genworth or Sagan. It's the same company. So what you're going to pay them. And the reason that they are involved on what's called a high ratio mortgage is because they allow you to purchase for less than 20%. And the way that they do that is they cover off the bank's interest, the lender's interest, with an insurance policy, so that the lender has the comfort level to say, okay, you know what, 5% is not very much, but there's an insurance policy in there protecting my asset, so I'm not worried about it. I'm gonna offer that loan. And so you can get into a home that is your own for far less money, but there's a cost for the insurance on it. So that's factored in there and becomes part of your mortgage. And then your total mortgage being that 375 number that's there. And then what your monthly payment is going to be. It breaks out the property taxes as well. So they'll be listed at the bottom as the annual amount, and then here as the monthly amount. That is something that is confirmed by your attorney when he pulls title on the property and pulls the tax certificate from the town. It is a number that does change. There are interim billings, there are additions and things like that, but it's kind of a ballpark amount, excuse me, based on the current tax information available for the property. And then it tells you, your monthly shelter expenses once the taxes are added, and what your gross income needs to be annually. So gross income being before taxes are taken off. So it's a little bit of a tool that kind of lets you break down the big number down into a monthly number, and then you can look at that and go, yeah, I can afford that, or no, I need to lower my budget a little bit. So just a handy tool there that I can certainly provide, house specific or not house specific. So that's the presentation. I hope it's been a useful tool for you. I thank you very much for your time. And again, as I said, very happy to speak with anybody that does have any questions. You can find me on Facebook. You can find me on the internet. You can find me on Google, or you can email me, phone me, that type of stuff. All of the information is available on this slide. So again, I'd like to say thank you to the MFRC in Petawawa for the opportunity to speak to everybody, to make this video. And I hope it's been a useful tool. Enjoy the rest of your day. Thank you.